This is James, and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Tuesday. In today's program, I want to discuss a certain political event occurring right now in the United States and the possible implications that could mean to the financial markets. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, yes, today is the US midterms, and it's quite an interesting case watching it to unfold. Obviously, I'm not, overly familiar with US politics, but I do get a good understanding of it. And all eyes of the market and all the investors of the market are keeping a very close eye on this event, because it could, in the medium to long term, have a big impact, of course, on the financial markets. Now, let's start off with, obviously, Joe Biden. Okay, he's incredibly unpopular at the moment, very unpopular. And he has got an uphill struggle. We've had many things he's had to deal with, such as COVID, war in Ukraine, the global energy crisis, inflation at 40-year high, an aggressive Fed, which of course is raising mortgage rates, making mortgage rates more expensive, and high gasoline prices. So he is, he's facing a fair bit, which, obviously the Joe public, they focus on day-to-day living costs. It is the high inflation. It is the high gasoline prices, which is dictating their minds when they come to be making decisions. So he has faced up, a lot of uphill struggle on this, because the overall picture, the bigger picture, us Joe public, we look at what impact that's having on the money in our pocket. So, that is the sort of the things behind it. Now, the expectations of this, though, is that we are potentially going to have a divided Congress and a divided Congress and White House. Okay. And I want to go through some potential scenarios of what that could be. Okay. But because the general expectation is, because at the moment, the two sides, you've got the Democrats, their main slogan is that democracy is at risk. They're going on about, obviously, what happened with the general election a couple of years ago with Biden winning and Trump saying it wasn't, and saying that if you elect more Republicans, we're threatening our democracy. Republicans, of course, are going, look at the state that Joe's leaving us, who's got us in. Look at how high oil prices. It's all Joe's fault, and Joe can't control oil prices. Obviously, he can. But anyway, the general consensus is that the Republicans will have a 50-50, will take over the House of Representatives. So they dictate that, and take a 50-50 percentage in the Senate. So what does that mean to the market? Let's play out some scenarios, what this potentially mean to the financial market. Now, first of all, no matter what happens, it won't change the Fed. Okay, the Fed's an independent party. So it won't change what they will do in their general decisions with tightening and economic reform on that side. So it won't change them. They won't change that. So they will carry on being aggressive with interest rates. Okay, we all know how hawkish they are and their fight against inflation. So we know that. So it won't change them. But fiscal policy could potentially have an impact. Okay, now, because of the Fed rate hikes, US debt is more and more expensive. And in fact, back in June, US debt to GDP ratio stood slightly below 125%. Now, the Democrats want to put many economic reforms into practice. One such thing, potentially, is regulation, or more regulation, on the tech giants. Okay. Now, if there is more Republicans in the House and in the Senate, it's going to block these reforms. It's going to be very difficult to get these reforms through, or get them, get them in law. So that's going to straight away, that's the likely scenario. It can be at 50-50. So that's going to be very difficult. However, if Republicans win both the House and the Senate, the market could see it this way, because the Democrats can't get their reform. Okay, because they say if they start to try and control debt, it means slower growth. Okay, if they put more regulation in place in certain companies, that's going to slow growth. If the Republicans most likely won't do that, they won't put in more regulation. They will carry on with the US debt getting higher, okay, because they are concerned with growth. So if you get Republicans in, if they win both the House and the Senate, US treasuries could rally. It could be good for stocks, and the US dollar could come under pressure. If you get Democrats to hold onto the House and the Senate, we could see a risk-off appetite, i.e. stocks come under pressure, and the US dollar gets stronger. Bit of risk appetite on. I mean, like I said, the problem with the midterms, we are unlikely to find out the result till maybe a couple of days. Maybe we'll find out the majority of the results by tomorrow morning, but it can carry on a couple of days. So it's not going to be an instant impact. But still, the market is looking at this and preparing for these outcomes. So if the Democrats hold on to the House and Senate, we can see a risk-off appetite. So pretty much stocks come under pressure, potentially, and a stronger US dollar. But like I said before, if we get Republican majority, we could see a boost in equities in particular. S&P 500 could get a boost. NASDAQ in particular can get the boost. Because like I said, the Democrats are looking at trying to place more regulations on tech firms. So both those equities could get a boost if we get a Republican majority. If we do get a divided government, which we are expecting to get, or what the expectation is a divided government, again, we could still see a boost in the market. Okay, whereas like I say, Democrat majority potentially may not be good for the market. There's something else though, which is coming up. Something else was happened over the last couple of days. Obviously, there's been a lot of saber rattling, a lot of people going all over these states to get the vote. Trump, he's also been incredibly vocal, obviously, for his party. And, drum roll, please. He's going to make an announcement on the 15th of November. I wonder, this is in Florida. I wonder what this could be. I wonder what this announcement could be. What is he going to announce? I think we all know what he's going to announce on the 15th. And this is another thing, okay, other thing. This is like, okay, we're talking about the markets in the medium term if we get a Republican majority. If we get a Republican majority and this guy makes the announcement on the 15th, which we're expecting him, we know what he's going to say, then most likely we could potentially see Trump back in the White House in 2024. And this means global politics, once again, it's going to be the Trump show. So that is something else. Anyway, before I go on to some other things, we start looking at the market, I want to share with you something really exciting, something else really exciting, and have a little chat about that. I'm a big fan of the Elliott wave theory as well, by the way.
Let's go.
Very big fan.
I traded the DAX in the morning, showed some really good signs of volatility as well.
Anyway,
join James and Stefanos every Wednesday at 1800 UTC for another lesson at Tixee Trading School, your key to a better understanding of the financial markets.
So there we go. Yes, there's something else I want to bring up. Tomorrow is going to be the latest episode of the Trading School. This is the Tixee Live Business Trading School. It's a brand new series. We've done 2 episodes already, so we're doing the 3rd one tomorrow. This would be on Wednesday, so like I say, tomorrow at 6 p.m. UTC. The subject of this episode is going to be the mind behind the market. In other words, the psychology of trading. And I'm a big fan of looking at the psychology of trading because it can greatly affect your trading decisions because it can be extremely emotional. So I like to discuss that and ways how we can try and take emotions out of our trading decisions. So please come and join me for that. This is, like I say, is an exclusive series. The link to join this episode tomorrow is in the description below. So please feel free to click on it and come and join me. And hopefully I'll see you then. Anyway, let's go and have a quick look at the market and see how the markets currently stand. So like I said, we've had a little bit of dollar weakness over the last couple of trading sessions. Obviously, because of, say, there was a little bit of boost of hope during from Friday's NFP reading. Any of those who don't know why the market looks at the NFP differently, even though it came in better at 261. I did a video on this on Friday where I dissected a little bit more about it. Currently, Euro did try and break above parity yesterday. It has since fallen back, so we have had a little bit of dollar boost. Currently, really is still capped at that potential area of interest at 1.0089. If we look at a daily, you can see, okay, we still are pretty much capped at that level at the moment. If we have a quick look at the sterling as well, again, say try to stay above the 114 handle. It did tease with 115 for a little bit, but again, we're back under. The key area for me now, watching it, is going to be 1.1498. So that's a key potential area of resistance I'm keeping an eye on. Dollar yen, again, very much range bound, no change on this at the moment. Like I said, the key area for me, potential resistance to see any bullish momentum is going to be 148.57. Gold. Okay, gold, again, still trading just above that key level of $1,667.86. Currently trading at 1,670. So pretty sideways there realistically as well. As you can see, again, to be fair, the market is going to wait for some indications of the midterms, but there's something else it's going to be waiting for, which I'll talk about in a minute. Something else I want to discuss as well with you, Bitcoin. Bitcoin has come under pressure because of the coin, the FFT coin from the FX exchange is in trouble, which is putting pressure on cryptos. Currently back below that key level of $20,355. It's trading under $20,000. So really, are we looking at to move back down now to that potential area of support, 18,438? But anyway, I would do this afternoon, I'll go into a bit more detail about the crypto crisis at the moment. It's not a crisis, it's a crypto concern happening in the market at the moment. So we'll go into a bit more detail about that this afternoon. So please come and join me for that. Again, like I say, S&P still hovering on that key level of 3,796 points, currently trading just a little bit above it. So again, yeah, a little bit boost. That's more for Friday. But realistically, that's how the market currently stands. But like I say, we are seeing a little bit of dollar strength again today, better than yesterday. Yes, the market is obsessed with the midterms, but again, this is going to be more of a slow reaction to the markets potentially. I think what the market is really waiting for is what's coming up in the next 2 days. And these are the events. Don't forget, we've got EU retail sales due in about 3 minutes. But it's this one, US Consumer Price Index, which is on Thursday. And I will be doing a watch long for that, because potentially that can be huge, because that's what the market's going to be looking at. Okay, CPI for instant reaction. Midterms is for long term, medium to long term. CPI is going to be more potentially more instant. So that's what the market is potentially waiting for. Don't forget, last time it did cause fireworks. You expected 8.1, this is year on year. It came in at 8.2, higher than anticipated. Core was supposed to come at 6.3, but came at 6.6. So this is going to be gigantic. Hey there, you're right. No, they haven't had a good day. Just getting the crypto through. I'll have a look. Well, like I say, it's been again. Look, the main struggle. Obviously, we've had a lot of drama with the other exchanges over the last 6 months as well. But the main thing holding back, certainly the king, is obviously we've had a lot of risk-off appetite. We are currently living in a bear market, so that has had big impacts on risk assets such as cryptos. So that's had a lot of pressure. I mean, compared to other potential currencies, though, Bitcoin's performed slightly better, slightly more stable than, say, the sterling has or the euro has. But it still has, had a bit of a tough time. It's having a tougher time now. But it's a really good point. I will be going a bit more detail in this afternoon about this, because I think it could be quite an interesting story. Because as you rightfully said, my friend, they haven't had a good day in a while. But yeah, like I was saying, it's all about US Consumer Price Index. Like I said, I will be doing a watch long on Thursday, because this could be key. Sorry. As well as that, we've got UK GDP, UK manufacturing production, German Consumer Price Index, and US Midterm consumer sentiment. European equities, as they currently stand, FTSE in the red, slightly negative, 0.27%. DAX currently in the green, 0.31%, and Euro Stoxx 50 currently trading also in the green at 0.11%. Don't forget, you can ask me questions anytime you wish, or simply say hello if you like, or share with me your opinions. Is there any sort of particular topics or subjects you like to talk about or you want me to look at? Bear in mind. Don't forget, we still have the hashtag Ask James series, which I'll probably do a new episode next week on that. Don't forget, this series is slightly different. It is still market orientated, but it's more educational. The idea is you send in a topic of your choice, and then I would dedicate a whole live broadcast just to cover that topic. So bear in mind, you have that option too. Okie doke. If there is no further questions, not a problem. If you think of a question later, you can go on either Facebook or you can go on Facebook or YouTube and leave them in the comments section. I will see them and I will reply to them next time I go live on air, which of course will be later today at 3 p.m. UTC. Like I said, I want to talk about, I'll talk about the US session, talk a little bit more about this crypto story as well. But I'll also talk about a certain media giant and their earnings expected after the market closed today. And you've guessed it, that's Disney. So I will be talking about that this afternoon. What could it explode for the global economy? Well, this is it. Good question. Like I say, it can affect everything because, like I say, political-wise, it's change of fiscal policy, which means has necessarily an impact on everybody. Because my main thing about this, in the long term, this is not going to be instant. In the long term, if we start seeing Republicans getting the House, and a certain Trump does indeed make that announcement on the 15th, which we all expect him to do, then obviously the global politics is going to be the Trump show again. Don't forget, he did a lot of relationship unbuilding. So that's going to be a matter as well. And don't forget a lot of the implications, especially with China as well. The China trade agreements, which she did, could also have a big impact on global markets. So it's majority of the Republicans coming in. The impacts it could potentially have on the markets in the medium to long term as well. Don't forget the old saying, if American sneezes, the world catches a cold. So it could have an impact on all of us and all of the situation for the global economy. I mean, at the moment, the Fed is being the most influential because they're being incredibly aggressive with interest rates, which is having an impact on all of us because it's making the dollar stronger, which makes, us buying things in dollars, because we use the euro or the sterling more difficult. So always has an impact on everything. But great question, by the way, a great question. So like I say, this afternoon, around about 3 p.m. UTC, I will be probably do something about Disney, about their earnings, and maybe one crypto story, and of course the US Open, and more developments on the US midterms. Anywho, thank you, Cypress X. That's a great question, and thank you for saying hello. And thank you, everybody, for coming along to watch. Don't forget, like I always say, if there is no more questions, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, find it interesting, by all means, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video, found it interesting, useful, and you've put out with me my over-the-top enthusiasm for the markets, I simply cannot help, then give me one of these. It's nice to know that you like what I do. But anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.